Hello, I'm Joseph Quijano, Certified Financial Planner with Become the Banker.
And I'm Jordan Quijano. We want to welcome you back to our channel and part 2 of dispelling the myths of reverse mortgages and really just talking about the mechanics. And we talked about our guest from last video, Ruth, and I'll let her introduce herself, but she is just an incredible source of knowledge. So for any reverse mortgage questions, regular mortgage questions, please give her a call, contact her, or contact us and we'll put you in touch with her.
Excellent. My name's Ruth Vogt, and I'm a mortgage lender with Fairway Independent Mortgage. I've been doing this since the late 70s, and it's been a fun journey, an educational journey.
Yes.
Because what we did in the 70s is not what we do today for financing. Just like with,
That's right.
Yeah.
it changes, it
does.
evolves. So most of you have probably never heard of a reverse mortgage. And if you did, it was probably from watching television and seeing that good-looking, mature gentleman that has the mustache and the great dimples and tells you all of the things that you don't really know about a reverse mortgage, but still don't know. So that's what we're going to talk about. We're going to talk about some of the mechanics of the reverse mortgage, who qualifies. Then we're going to even talk about some of the misunderstandings about, you just have no idea some of the things some of my clients have come to me and told me that they heard. So we're going to just approach that head on. First off, a reverse mortgage, you do have to be 62 or over. At least one spouse has to be 62 or over. So if one of you is 62 and the other is 55, that doesn't mean that you're disqualified from doing a reverse. It's just a different set of rules, and we talk about different requirements and so on and so forth for the purchasing spouse that is not 62, and then we talk about a plan for when they become 62. So we go through all of those requirements with them up front. But it used to be only 62, everyone had to be 62 or over. That's no longer the case. People often, when they talk to me about a reverse mortgage, say, "Oh, but my credit is terrible. I'm in big trouble. My FICO scores." Pish posh. We don't care about FICO scores. Now, on the forward mortgage, the traditional mortgage, that's very important, because what happens in that case is the lender is expecting you to make those repayments, so they want to look at your credit history to know that they're secure in you continuing to make mortgage payments. But on a reverse mortgage, we're qualifying more on the house than on you. We look at the house because ultimately it will be the house that will repay that mortgage. You don't make any monthly payments. Not that you can't make monthly payments, you can. If you're so structured that you want to continue making monthly payments month after month after month, we certainly allow you to do that for principal and interest. What you do have to do, though, is you still have to pay your taxes, which is no different. If you had the home free and clear, you still have to pay taxes or you could lose it. You also have to pay insurance, and we're going to want to make sure that you've paid your homeowners association dues if you have any. Those have to be paid on time. Why? Well, because if you don't, they can take your house. Now remember, we're focusing on the qualification of the home because that's our collateral. The amount of mortgage that you can get on a reverse mortgage is based on 3 things. It's based on age, it's based on value of the home, and it's based on expected interest rates. Those 3 things go into an algorithm and spits out a figure and says this is the maximum amount of mortgage that we can do on a reverse. Now, with that being said, I want to tell you that what I'm going to be talking about is a home equity conversion mortgage, a HECM mortgage that is insured by FHA. So what most people have heard all the bad things about was not an FHA HECM. It was not one that was insured by the Federal Housing Administration. Those are called proprietary. Not saying that all reverse mortgages that aren't FHA and are proprietary are bad.
Right.
I'm just saying that, you know that expression, he who holds the gold makes the rules?
Right.
When you're in a proprietary world, there can be different rules.
I see.
So we have to remember that if somebody's had a bad experience, it might have been a proprietary. or it might have been something that happened to Aunt Sally 20 years ago.
Right.
And I say that because 20 years ago I didn't want to do it. I didn't want to even talk about reverse mortgages. It was a lot different. With the reverse mortgage today, the FHA insured mortgage, it has so many built-in protections that it's a different animal altogether. One of the things I hear all the time is, well, they just want my home.
Yes.
They're going to
yes.
take my home. Trust me. FHA got a lot of, and I don't know if you know what an REO is, but that stands for real estate owned.
Okay.
In the 80s, when we had a lot of foreclosures going on, FHA got a lot of REOs. They took back a lot of homes through foreclosure and found out very quickly they're not in the business to
They don't
sell.
need-
They're not
yes.
realtors. They don't want to be in that business. Trust me,
Yeah.
they do not want your home. What they want to do is provide you a resource to live in your home until you die or until you decide you're going to sell. Another misconception.
Oh, wow.
Some think that because it's a reverse mortgage,
Yeah.
now I've lost my rights of,
Owning it or selling it.
Exactly,
Yeah.
but it's no different. A reverse mortgage is the same kind of, from that perspective, is just the same as it would be with a forward. You sell your home, you pay off your mortgage, and your kids or you get the equity.
Beautiful. I mean, so that almost
beautiful.
goes to the point that if your value of your house, the equity keeps on growing, they can also get more from that reverse mortgage or more equity down the road. Is that correct?
Absolutely,
sell it,
absolutely.
yeah.
Yeah,
Or
absolutely.
if they refinance, I think is what you mentioned too. If you do it, so that's beautiful. If you I think that was always a misconception I got from my clients is if I did have a reverse mortgage, what would happen if the house went higher in value? Especially here in Colorado, we're seeing property values skyrocket all the time.
Right.
So that's
Right.
peace of mind, and I think that's comfort.
Right.
That is good.
What
So-
what would you say is another big misconception?
Well, one of my clients said, well, her neighbor told her not to get a reverse because we're going to make them put a handicap ramp up to the door. I said, here's what we do require that you do. You have to keep your property up to minimum property standards. You want to put a ramp up, put a ramp up. You want to paint your walls purple, paint your walls purple. But it's up to you. You just have to keep it up to minimum property standards. If the kids are out in the backyard and they throw a baseball
Yeah.
in through your front window, you got to get it fixed.
I mean, that's probably no different than an
That's
HOA,
normal.
Right.
That's normal.
Yeah.
Exactly.
So that's not too bad.
What
then.
about the equity percentages? Do you have to have a certain equity amount to qualify for a reverse mortgage?
Yes, it is based on a percentage. And remember, I had said it's based on three things: your age, the value of the home, as well as the expected interest rate. Those three things calculate what's the maximum.
I see.
As you get older, or your property value goes up, you qualify for more. So
sense.
in my particular case, we closed on our reverse, and as a matter of fact, I'm going to stop right there, and I want to just share something with you.
Yes.
Because this shows the peace of mind that it gives not just me, but my husband. We closed on our reverse mortgage a year ago last October.
Okay.
Within a week after we closed, I found my husband unresponsive. And I had to call 911. He spent some time in the hospital. Thank God, everything turned out okay, brought him home. The next morning, he woke up and he said to me, I am so glad that we've closed on a reverse mortgage. Do you know what that just said? What he was just saying was he didn't have to worry. If he died, I'd still have my home.
That's huge.
I would,
Beautiful.
and so he was relieved to know that. And as far as statistics go, do you know that 80% of women die single because they outlive
Oh, yeah.
Yeah, and that's
their husbands.
That's and I've seen this happen so many times. Just to jump in on this, where unfortunately the husband handled a lot of the paperwork, the bills, the finances of understanding where it was,
Right.
and then something happens and he passes, and the spouse is left behind to manage everything, which she might have not done for some years. And so the house is the biggest part a lot of times, and I think you've said this best. Having the peace of mind living in your own house is crucial. Not having to be put somewhere else, having to sell it, that's a big peace of mind. So a reverse mortgage, you're really sharing some good parts to all of this. I love it.
Absolutely. Ruth, there's about 90% of the consumers today that were actually, they did a survey. They don't want to go to a nursing home. They want to stay in home.
Makes sense.
But the cost of home health care has gotten so expensive that they can't afford it.
Right.
So, but they're idea is to stay home as long as they can.
Yeah.
They don't want to go out to a facility.
Right.
So by having a reverse mortgage, they're allowed to do that and still have money coming in.
Right.
I mean, that's beautiful.
It's perfect,
That's
isn't
the
it?
best of
It is.
both worlds.
Absolutely. It really
And the
is.
peace of mind that you shared, and thank you for doing that, by the way.
Yeah.
That peace of mind tells it all, right there. Tells it all. That if we were to pass away, that you're safe.
Right.
That your home is your home. You're going to stay there.
Now, Ruth, you probably already answered this, but I just want to bring it up because I came across this last week with one of my clients. And she's got both plans with us. Her money's building beautifully in bucket 2, working for her. But her whole goal is to pay her house off now. She's got, I think, still about 15 years left on her mortgage, and she was, in another states. And her goal was to say, okay, you know what, Jordan, I want to take a loan, a HELOC, pay down my house faster, and then start taking money from bucket 2 to pay off the HELOC, so I can get out of my house in 7 years instead of 15. What would you say to that? I know I've heard this quite a bit with people on the internet. This is what I've heard. I can pay my house off a lot faster if I get a second loan or a third loan and start paying that house off quicker.
Well, not only did they sacrifice part of their money in bucket 2, their financial bucket.
Yes.
But in addition to that, now they're going to have a monthly payment, take money out of bucket 1,
Yep.
and put it into bucket 3. So what they ended up doing is, again, just dumping it all into the equity that is not liquid. Do they want to die with the most money or the most equity?
See, and that is a good question right there. Would they rather have the house free and clear and no money, or have the house and the money, which is what the reverse mortgage allows?
Right.
Ruth, I do have a question, okay, for you. The percentages of equity that somebody has to have to qualify for a reverse mortgage.
It's hard to say. It's not like a forward mortgage,
Okay.
where you can just say you've got to have a 5% down payment. It doesn't, because remember, there's those 3 things that go in
Right.
but a general rule of thumb, because it is based on the life expectancy. So the general rule of thumb is if you're in your 60s, you're probably going to be maybe looking at about being able to pull out about 40%. So you have to have about 60% equity.
Okay, that makes
And
sense.
if you're about 75, you're probably at that 50-50. So if
Got
you
it.
have a home that's 800,000 and you have it free and clear, then we can release about 400,000 of liquidity
Yep.
without monthly payments, with
But you live
optional
there.
optional monthly payments. I'm not
Yeah.
saying
Got it.
that you can't, but they're optional payments. And keep in mind too, with a reverse mortgage, you have to pay your taxes, and you have to pay your
Right.
insurance,
Makes sense.
and you have to live in it as your primary residence.
So the equity that you have in your home then, Ruth, does it make any difference if you have a lot of equity or no equity or mid? I'm trying to find out, is there a certain guideline that people have to have as equity in their house to qualify for a reverse mortgage?
Just based on their age. If they,
That's it?
Okay.
but they've got to have, if they have less than 50% equity, if they have a house that's valued at 800,000 and they owe 400, 500,000, it depends on their age.
Got it. So those are kind of more of the
Okay.
particulars
All right.
that somebody would call
Right.
you
And I
work
couldn't
with you
even use my
individually.
calculator and work
Yeah,
those.
sure.
It's a computer program
I see.
that goes
Got it.
into and takes everything into consideration.
And that makes sense. I mean, obviously, there's got to be a give and take, but to be able to live in the house, basically free and clear still, because
Right.
you don't have a payment,
Right.
and you still get 400,000 in that example. I mean, you really get the best of both worlds. You really do, and I love that. And you don't take money from bucket 2, which might be your investments, retirement. You're able to live off of Social Security, whatever bucket 1 is, your paycheck.
Right.
That is just amazing. So,
And you have the most, and besides that, Jordan,
Yeah.
you have the emotional side
of course, yeah.
of staying in your home. Just like you
Peace
share
of mind.
on your own experience, Ruth, about your husband, becoming unresponsive. And when he woke up, he said, I'm sure glad that we closed on that reverse mortgage. See, that's the emotional side.
Yeah.
It gives you security. It
Right.
gives you peace of mind
Right.
that you're going to remain there. No
You
matter
know,
what.
and now if we fast forward, I don't know how many years, but fast forward to where I'm the one that's needing the extra care. By having a house that I have no monthly payment on, I can actually use my home to bring somebody in
For like long-term care needs, you're talking about. For
Exactly.
in-home
If
health.
I need the care, then I've got a home that I can figure out how I can use my, maybe I bring in board and room,
Right.
factor all of that in, but I can use that extra equity that I had to help supplement with the long term that I have with you.
That's
Beautiful.
right.
And I don't have a facility like a rest home facility
Right.
that I'm paying for their overhead for their bricks and mortar.
That's
I've already
huge.
got mine so that expense is wiped out. So you
Yep.
look at the cost of long-term care today and what they're estimating.
It's insane.
It's because they're figuring you're in their facility.
Yes.
If I'm in my home, I'm only paying for one person's help.
Well,
That's right.
And that
to
average
make it better,
cost.
to make it better, Ruth, the products that you have with us, that Become the Banker is strategy, the guaranteed pension account,
Right.
they all have built in
Long-term
a
care.
long-term care benefit.
Right.
So you don't have to dip into any other bucket.
Right.
That plan that you have with us has it built in.
And that's what I was gonna say. The cost here in the U.S. it's right around like $9,000 to $10,000 a month. That's average. I mean, that's not a nice facility. It's not that. So just to put that in perspective, that's a tremendous amount of money. So really, Ruth, I appreciate everything you brought to both
Absolutely.
this video, the last one, and sharing your information with us. Not only personal, but just the knowledge on what we can do better with our homes and how much the products have come such a long ways over the last 30, 40 years.
Absolutely.
So I thank you. Thank you so much. Can you please give out your number and name one more
Certainly.
time?
I'd love to. Again, my name is Ruth Vogt. I'm with Fairway Independent Mortgage, and my phone number is 719-592-0855. And if you want to check us out online, our website is lifetimelender.com, because whether it's your first home or your forever home, we're here for a lifetime.
And that's great because with saving that money, getting some of that money from reverse mortgage, it can help you with a lot of things. And so give her a call, give us a call. We work together, we can help each other out and make sure that you're getting your money safe, sound, but you're living in your home, peace of mind.
And I hope you really have enjoyed this video. We try to make an educational series, so the next videos will be on a different topic to get you highly educated in the financial world. So I want to thank you, Ruth, for being my client again and for taking the time away from your schedule to be here with
Yes.
us and share this wonderful knowledge on how they can increase their financial equity by learning.
That's right.
So thank you so much for watching. I'm Joseph Quijano.
And I'm Jordan Quijano. Please like, subscribe, leave comments, and then notify on the bell there so you can see the next video that comes out. We thank you, and we'll see you on the next one.